Street, Financial Select Sector, SPDR ETF, Daily Chart. The system's verdict is long, but the number that matters is the entry level, and that's coming at the end. First, proof. 3 layers of evidence, then the trade. Retail view first, patterns and indicators, then the institutional read, then the trade itself at the end. Let's go. On to the chart, 60 daily bars and one story. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $58.71. Red is our SL at $54.95. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily. Double bottom, in V head and shoulders, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Before the detail, tomorrow's scan is already scheduled. 1 tap now and you won't miss it. Pattern number 1, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs 50-47, measured move target 53-162. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 5.5%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 2, this is the in V head and shoulders. It's a bullish formation with 3 out of 3 strength. Head 50-34, shoulders of $51.90, neckline 53-37. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 0.6%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 3, this is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole plus a 4.8%, then tight consolidation, bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plunge 4.8%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Candle signal number 1, a doji just formed on the very last candle. See the dashed box on the chart? That's where it printed. It's a neutral read with 1 out of 3 strength. Open close, indecision, potential reversal signal. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Key levels next. These are the prices where the market has actually made decisions before. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of +0.51, technical 0.20. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 36, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Quick gear change. The chart told us what retail sees. Now let's find out what smart money is actually doing. Order blocks, fair value gaps, the institutional read. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bearish zone between 53.49 and 54.03. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $56.16 and $56.18. Price tends to revisit these imbalances. Most importantly, we just had a choke bullish move at $53.20, a key structural signal that smart money traders watch closely. Now the volume profile, where positions were actually built, which is where price reacts. The point of control, the most traded price, is at 51.26. The value area runs from $50.65 on the low side to $53.69 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 56.75 is above value area high, 53.69. Trading above VAH indicates bullish strength. POC at 51.76 is key magnet support. Now, order flow. We estimate buying and selling pressure from each candle's close and volume. Over the recent window, buying pressure accounts for 56% of volume versus 44% selling. The overall flow signal is bullish. There's a bearish divergence. Price hit a new high, but cumulative delta didn't follow, which often means smart money is distributing. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 81. Signal bearish. Williams percent R is at 2. Bearish. Chaikin Money Flow reads 0.04, neutral. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Quick zoom out, the bigger market picture. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. By the way, the trade levels land in about a minute. If this is useful, join now so tomorrow's scan finds you. Here's the unsexy slide that keeps you in the game. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. This is what you stayed for, the trade. Bias is long. We'd look to enter near $56.40. Take profit sits at $58.71. Stop loss at $54.95. That puts us at 1.58 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 1.58. Horizon is roughly $50. That's the play. One more time, this is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. If this breakdown helped, the like button genuinely helps the channel. And subscribe so tomorrow's scan finds you. So zoom out for a second. What we just walked through on XLF, that's a long bias setup projecting roughly 4.1% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow. They all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Comment your watch list ticker, and it might be tomorrow's video. Trade safe. See you in the morning. Tomorrow morning, the AI scans the entire market again, and I drop a fresh breakdown on whichever ticker ranks highest. Could be a stock, could be crypto. Join the channel and turn on the bell. That way tomorrow's video actually reaches you. See you in the morning.